Welcome back to Trading 360. I'm Nicole Petallides here on the floor of the New York Stock Exchange. So glad you're with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Charles Moon, Prosper Trading Academy. Good morning to you both. Charles, how's this week setting up in your mind? A winning week or a losing week?
Could be a combination of both. Quite honestly, it's really going to be dependent on what the Fed's decision is going to be. You know, when we look at the CME Fed Market Watch, they're pricing in 100% certainty that there's going to be a cut. It's all about how the markets digest whether it's going to be a 25 basis point or a 50 basis point cut. Right now, we're actually pricing in a greater chance that we're going to see a greater move than anticipated, being a 50 basis point cut. But will that signal to the markets that the Fed has been slow to react and perhaps, stoking a little bit more fears of recession? And that's what's the concern here, how the market is going to react based on Fed policy. So it'll be interesting to see. I'm almost thinking that a 25 basis point cut will calm the markets more, and it'll be more likely that we continue to rise in anticipation of the next 2 FOMC meetings. And I'm thinking that a 50 basis point cut may cause a lot of volatility and uncertainty. It's not necessarily going to mean that the market's going to go down, but the markets are going to swing a lot more aggressively than they've been as of late.
Yeah, and there are calls. There are many calls for 50. There are many calls for 25. It'll be very interesting to see what the Fed does. Let's talk about Zillow. Why did Zillow jump out at you today, Charles?
Yeah, considering how back and forth the markets have been, especially with the NASDAQ names, names that are tied to this rate cut have been really catching a strong bid. Housing stocks have been really working a lot higher. They've been bucking against the trend here. And Zillow is one of those names, along with Redfin, that have been fairly explosive in the last few sessions. The fact that they're making their new 52-week highs today really stands out to me. And more importantly, they're bumping into a very critical technical pricing level of $65. Now, you got to date back almost 5 years. But, this is when Zillow used to be a triple-digit stock and had a massive free fall. Due to some controversy. But ultimately, this threshold really does get into the point where Zillow could open the skies up. Now, I'm not saying they're going to make this run to $100, but, there's a 200 SMA on the weekly chart that they got to get above. There's an old resistance level at 65 they got to get above. And once they get above that level, there is no technical point until right around $102. So this is one of those rate dependent plays that could benefit greatly from Fed policy, regardless of what it is. And the fact that rates are going to come down might make names like Zillow and other housing names a lot more attractive in the near term than, let's say, tech names.
Yeah. Okay. Let's hear what Ben Lichtenstein has to say about the charts, please, Ben.
I like the pattern on the more short term, more intermediate. The longer term, I think the bulls still have some proving to do here still. We'll get into that chart in a minute, but let's just start off with the 1 minute candle. You can see it behind me. It's a pretty textbook example of what I like to look for. We've got some balance forming at higher and higher levels. So again, on a very short term time frame, we're trending up. You can see again, 59, 20, 61, 62. We actually just pulled back down to that $61 level, found a little bit of support off that. So establishing value again around 62. Now, similar pattern as you take a look and step back from that 1 minute candle, add a bit of time on. We're looking at hourly candle chart here, and you can see 43, bottom left, top right, just really well-defined trend. Then we bounce around 55, high conviction trade as we break out. So basically the bulls were looking for something a little bit more sideways, horizontal to establish itself here. So again, some overlapping rotational price activity might be kind of healthy even at this point, but definitely a bullish pattern. And then even as you look at this, 1, 2, 3, I'm counting maybe 4 times you could identify that this pattern, again, big move up, sideways consolidation played out on a very short-term time frame, multiple times within that big move up that we saw again a couple weeks ago. So just adding a little bit of time on, and you're going to see it's not as similar as what we were just talking about in terms of bottom left, top right. This is where I was talking about some heavy lifting to do in terms of the bulls still having to really prove themselves at this point. Taking out recent highs, I think that's that's important from earlier in this year, end of last year, but you can see the highs that we saw end of 2021 and the beginning of 2022 still intact. Here's that level that Charles was talking about in terms of that 100 area. But yeah, building momentum to the upside, testing upper extreme range that we've been in for quite some time now. So attempting to get a bit of a reversal at this point, but I think it's a little bit early still to declare a victory for the bulls now.
Okay, let's see what Charles has to say. I mean, there's certainly this feeling that, as you guys have mentioned, I mean, as rates come down, there will be an influx of buyers who are just waiting for that key rate to lock that in. Meantime, the prices will probably be going up because so many people are jumping in. This is what Barbara Corcoran was saying. Charles, final thoughts on that one?
Yeah, I mean, again, I have no illusions that Zillow's going to get back to $100 anytime soon, but they could really effectively get, very active through that 65 threshold. Even a $5, $10 jump is going to be tremendous for a stock priced in the 60s. And again, these rate sensitive stocks are really getting a lot of attention this week, and rightfully so. So, these are just names that I'm keeping on my radar. With Zillow, without having that much upside interference, certainly could be one of the easier plays, in terms of path to profitability, especially if they're the ones that are going to benefit greatly in relation to the Fed policy decision.
Right. Okay. Next up, Carvana, back in good graces, I guess, right?
Yeah, it's funny because this is a stock that was very similar when it broke out from their $60 range, and they just got absolutely crazy. Obviously, kind of the trading around the stock, the short float has made a, massive difference in terms of pricing. But here's the thing, the market has been really, really shaky, names, growth stocks, certainly those that love to play momentum names have gotten knocked back pretty significantly. Yeah, Carvana has been able to maintain and, in fact, outperform a lot of some of the Magnificent Seven names that we've been watching here. A lot of the names tied to, the hottest sector of 2024, semiconductors. And here we are today, Carvana just outshining. The markets are down quite a bit in terms of the NASDAQ. S&P is down right now. Carvana, up around $8, $9 for the session. Been basically strong since the open. This is another name that's, rate dependent that could benefit greatly from the Fed policy. They right now just broke above technical resistance and that psychological threshold of 150. So if they're able to maintain support right around this 150, 148 level, I love the short-term bounce to test that 52-week high at 159. And they break that level, just Carvana's going to do what they do. They start stacking at highs and they get a little parabolic, and then they retrace back really deep, and then it's kind of rinse, wash, repeat. At least that's how it's been for the last few months for this stock.
Yeah, in the last couple of days, a real disparity as far as one of the analysts. I mean, one says $190 over at Stevens & Co., and Evercore ISI has a 157 target, so raising that from 142. So it'll be interesting. They both have higher targets than where we are now, but a real difference in where they think it's going. Let's hear what Ben says about the charts, please.
Yeah, this one, it's pedal to the metal on CVNA, that's for sure. I mean, we were just talking in our last example about how we're seeing a bit of a bull trend on the more short-term intermediate, but not quite on that longer term. Carvana has been able to turn things around on that longer term. We'll get into it in just a second. So it's really proving itself. Again, the bulls have done the heavy lifting necessary in this example. Let's start off, though, again, as always, Nicole, with a more intraday look at price activity. Got a 1-minute candle chart queued up and a prime example of what I like to look for. Again, these areas of consolidation that form, these areas of balance that establish themselves. And in this instance, we're talking to higher and higher levels. Bullish pattern, 142, 149 are the areas that I've my eye was drawn to. But look, as I look at this, you could also probably identify, now that I think of it, 145 is an area where, again, the market paused, went briefly horizontal, and then again, that transition. Wash, rinse, repeat. We're talking sideways, vertical, sideways, and again, bullish pattern playing out as values moving higher. Now, we're starting to see a turnaround story begin here on Carvana. Let me show you, because we always talk about not only these areas of value being able to help us determine trend, but also trend reversal, because in this instance, we were trending to the downside. You can see all these areas that the market paused and regained composure and confidence in this down move. And then so each and every time that we're establishing balance, you're referencing the prior area, because the shorts, when we were, for example, balancing at 144, they wanted to see a breakdown, new area of value form at a lower level. They did. So then you're balancing around 140, and your kind of line in the sand is that prior area balance. So again, each time when you establish balance at 134, you're constantly looking at 140 to determine, is it still playing out, and that staircase still headed down. So we were right all the way down to 130, referencing 134 is the key area. Look at this. As we break above that area, it's been nothing but upside since. So retracing key areas that were established on the way down, and then again, I mentioned on that longer term time frame, the bulls being able to do the heavy lifting. Not only, again, taking out some of these key highs, but also this big area around 140. So there's been some momentum to the upside here, to say the least, Nicole.
All right. Charles, final thoughts there, and then I want to get to GE, which is at new highs.
Yeah, and again, I make no illusions that I'm a fundamentalist here. I am purely a technical-based trader, but, price action is a really determining factor on demand and whether I want to buy the stock or not. And certainly names like Carvana with great momentum, you catch it right, it's going to be a great day. NVIDIA propped up above the 50-day moving average, but fell through it today and got really weak. Well, Carvana on Friday made the same maneuver, found acceptance above the 50, and instead of rolling over, they've used that as propellant to basically break through a key resistance level, and here we are at a breaking point. They're now above that breaking point, that psychological level of 150, really trying to push for that 159, 52-week high. And again, they break that level. We've seen what Carvana does when it starts pushing highs. It just goes a lot higher.
Yeah. All right. As we think about GE, it's sitting at record highs this week. Over the past week or so. Some of your thoughts, Charles?
Yeah, it's funny. You would never suspect GE as being a great momentum name based on how it's performed over the last few years. But, the chart this year is unbelievable. They are ungodly strong in relation to a lot of different names. And this isn't a growth stock by any means, but looking at it from a technical standpoint, the fact that they're breaking and making new 52-week highs, they've retraced back a bit. So they're now at this threshold that I'm watching, this 177 to 175. If they're able to sustain this level even just for a day and rebound off of this level, it really pinpoints historically as short-term demand. This is where breakout traders are going to be watching the stock and looking for this push through 180. And again, we've seen the trajectory of the stock. Once it starts breaking, it just continues to rise. They had that initial breakout earlier this year around $105, $106. It didn't stop until it got to around 140 a month and a half, 2 months later. So I'm not trying to pinpoint the fact that GE is going to make a 30, 40, dollar jump from here, but if they're able to sustain this 177 to 175 range, I see them easily breaking through 180, pushing towards 183, 185, and perhaps really working towards $200, which is where this trajectory is headed towards.
Ooh. Ooh, the shareholders would love that, right? New highs again then if they do that. Let's see what Ben says about the charts, please, Ben.
Hey, if Walmart can do it, why not GE, right? That's kind of the way I look at it. A nice move up here, that's for sure. Charles is on to another stock that's exhibiting real good strength on the more intermediate, the intraday, granular, more intermediate, and that longer-term time frame. We're going to start off, as always, with the more short-term 5-minute candle chart I queued up. You can see nice move up in the end of last week, beginning of this week, and up to, well, just shy of 180.50. Still holding on to those gains, a little bit sideways up here. It's where you get a little overlapping, rotational, and just kind of pause, having accepted the most recent run-up we've seen in the most recent move. And then again, the bulls are looking to regain composure, break out above 180.50, establish a new area balance at a higher level. I went ahead and mapped out a few that my eye was drawn to, again, on this 5-minute candle chart. 164, 170, 178. So again, on this very short-term basis, just kind of with the idea that the market is establishing value at higher and higher levels, kind of like the opposite of what we were just talking about in our last example and some of the selling, that reverse of the downtrend we saw on Carvana. The bulls don't want to see us take out 170. They want to see a breakout again above 180.50 and a new area value form at a higher level. Let's take a step back. I want to show you what's going on. It's not just over the last few days. We've seen strength, bottom left, top right. We're now in an hourly candle chart. It's going all the way to, we're talking middle of March here, Nicole, and you can see easily identifiable high conviction trade, again, where we see higher highs, higher lows, can also see this wide range trade that occurred, multi-month mature area balance. So now we're really trying to get something going as we break out of this, a high conviction trade to the upside. And again, you can see the significance associated with the move we just looked at on that short term. The bulls really want to see some follow through here, some conviction, some participation, some energy. And the reason they want to see that is because this is in line with that longer term trend. So we've added quite a bit of time on here, going all the way back to the fall of 2018, beginning of 2019. Again, just kind of establishing the staircase, pauses or areas, value areas, whatever you want to call them, where the market kind of regains composure. We're balancing around 166 recently, trying to break out of that right now. But look at this huge move we saw end of 2023, beginning of 2020 this year into the spring of this year. I mean, a little bit more sideways over the last couple months here, but trying to repeat, wash, rinse, repeat, kind of, again, establish that vertical move to the upside, high conviction move higher. Definitely bulls in charge, it looks like.
Yeah, all right. The bull's in charge, he says. Let's see. Final thoughts, Charles Moon.
Yeah, everything is going to be dependent, on, the Fed policy decision. Really, the markets are just looking for clarity. I think if we get clarity, we're going to finish this year off really, really strong. Even with the election pending, it's almost as if the market just doesn't really care too much about the election. The focus is purely on the rate decision. What Powell has to say about November and December could really make a strong impression on the markets on how to trade into the end of the year. So it's going to be really important that the markets get a little bit of clarity. Without clarity, there's more indecision, a lot more volatility, a lot more of what we've seen here in the last few months.
Great to see you both for the big three today. We had Zillow, Carvana, and GE. Charles Moon, Prosper Trading Academy, and Ben Lichtenstein there on the charts. Thank you both. Good to see you.